Today, we're diving into a really critical issue, one that a lot of successful Canadian families and business owners, frankly, are just not aware of. And it's an issue that can put their entire legacy at risk.
You know, you hear this sentiment all the time from successful people. There's this real sense of security that comes from building a great business, or a solid real estate portfolio, or just a significant net worth. And the thinking is pretty simple. Whatever comes my way, my assets will cover it. But here's the thing, that confidence might be seriously misplaced.
Okay, let's get right into this because this one simple question, it exposes a massive, and I mean potentially devastating blind spot in so many financial plans. The answer is a hard no, and understanding why is the absolute key to protecting everything you've worked so hard to build.
So let's start by exploring this very common mindset, this illusion of being self-insured. It's especially common among entrepreneurs, real estate investors, and, families with a net worth north of that $2 million mark.
And look, on the surface, it kind of makes sense, right? If you've got millions of dollars in assets, why on earth would you need anything else? The problem is, this confidence is often built on a really shaky foundation, one that completely overlooks the final bill that every single one of us has to pay. So now, let's introduce the unexpected villain in your family story, the Canada Revenue Agency. See, the CRA has a process at death that can force your family into a financial crisis you absolutely never saw coming.
Okay, this is the crucial part right here. The moment you pass away, the government, in their eyes, treats it as if you sold everything. It doesn't matter if your family wants to keep the business or hold on to the properties. As far as the CRA is concerned, you just had a massive sale, and the capital gains tax from that sale, it's due immediately.
And we're not talking about some minor accounting adjustment here. This is a financial shockwave. It creates an urgent, completely non-negotiable demand for a huge amount of cash. And, as you probably know, the CRA isn't exactly known for its patience.
Now, what's so powerful about this slide is that this isn't some theoretical number. This comes from a recent case, a $4 million family business. This was the exact tax bill due to the CRA, $945,000. Now, the family had the assets, but they sure didn't have the cash.
And that right there, that story, it just brilliantly illustrates the heart of the problem. It's this massive disconnect between the value of what you own and the actual cash you need to settle your final affairs.
Think about it like this. On one side of the ledger, you've got your life's work, your business, your real estate portfolio, all that bricks and mortar. It's incredibly valuable, for sure, but you can't just shave off a corner of a building to pay a tax bill. On the other side is what the CRA demands. Cold, hard cash. And very often, there is a huge gap between the two.
And when that happens, your heirs are forced to make terrible choices under immense pressure. They might have to sell the family business you spent 30 years building, or unload properties in a fire sale for pennies on the dollar. And here's the real gut punch. Without proper planning, the single largest beneficiary of your entire life's work can end up being the tax man. So, how do you know if your estate is actually prepared? Well, let's run through a simple stress test to see how that self-insured strategy of yours really holds up under real-world pressure.
And I want you to be really honest with yourself here. If your executor had to write a check to the CRA tomorrow for, let's say, 25% of your net worth, could they do it using only the cash you have sitting in the bank and liquid investments, without touching the business or any of the real estate?
Okay, next question. We call this the lifestyle runway test. After all the taxes are paid, is there enough left over for your family to be okay? Not just for a few months, but for the long term. Or would they be forced into immediate, drastic lifestyle changes? This is a huge issue for family harmony. If one kid gets the family business, what do the others get? Without a cash reserve, it is almost impossible to make that distribution fair, and that can cause rifts that last for generations.
And that right there is the hard truth. If you answered no, or even just I'm not sure to any of those questions, then what you have isn't self-insurance, it's self-exposure. You're leaving your entire legacy exposed to creditors, taxes, and yes, forced liquidation.
But here is the good news, and it's really good news. This is an entirely solvable problem. With the right strategy, you can transform that exposure into rock-solid security and make sure your legacy passes to the next generation exactly the way you want it to.
The solution is actually a pretty straightforward process. First, you get a clear, accurate number on what your future tax bill will look like so you know exactly how big that liquidity gap is.
Second, you build a smart plan to fund it. And third, you use the most efficient tool for the job, which is often corporate-owned life insurance. This lets you create a pool of tax-free cash that shows up at the exact moment it's needed most, completely bypassing the estate and going right where it needs to go to pay that tax bill. Ultimately, this isn't some morbid, depressing conversation. It's actually a really powerful one. It's about taking control of the outcome and making sure that all your life's work is protected, preserved, and passed on according to your wishes, not someone else's. Now, as you can imagine, a plan like this has a lot of moving parts. To navigate it properly, you need a guide who really understands the entire picture, not just one little piece of the puzzle. And this is exactly where a firm with comprehensive expertise like Muneris Financial Services becomes so invaluable.
What's really powerful about their approach is that their team actually includes licensed mortgage and real estate brokers right alongside the financial experts. This means they understand your bricks and mortar assets from the inside out. On top of that, the firm's CEO, Manzoor, is also a qualified life insurance broker. So what does this mean for you? It means clients get expert advice across all these critical disciplines from a single trusted source. It's a truly holistic approach for a very complex problem.
So at the end of the day, the real question isn't about your net worth on a piece of paper. It's about this. Will your family have the cash to settle your affairs with dignity, or will they be forced to dismantle the very legacy you worked so hard to build? If you want to stress test your own estate, get some real clarity on your situation, this is how you can connect with the team at Muneris Financial. They can help you find the answer to that final critical question and make absolutely sure your estate survives the CRA intact.